What's going on, traders? Welcome back to another video. In today's video, we're going to be talking about a really important topic for traders, and that's psychology and managing risk. Let's go. Okay guys, just before we get into the video, if you haven't already, please like and subscribe. We're trying to build a community of rad traders just like you. There's going to be loads of content coming up this year, and I can't wait. So yeah, click that button. Let's get into the video. Okay guys, so psychology and managing risk. It's very important in trading. It's probably the two most important things that there are in trading. It's something that many traders overlook, but without the right mindset and risk management strategies, you may find yourself losing money even if you're trading a strategy that you know very well and you know works a lot of the time. Psychology can really throw you off. You know, you can be very you can have too many losses that can bring you down. You can have too many wins that can bring you up too high where you think you're invincible, and then bang, the market comes along, takes out your stop loss another 3 more times. You're back to break even after that winning streak, and you're feeling down. You're feeling defeated. So psychology is a huge thing that traders need to work on. At the end of the day, the market is run by psychology. It's run by buyers and sellers. It's run by ideas. It's run by people's emotions. So you've got to control that in the market to succeed. And the thing to help with that is managing risk. If you can manage your risk and keep your risk as low as possible, that's obviously going to keep your mind sounder and not have such a pressure when you're trading, right? You don't want to over leverage, you don't want to over risk, because if you do that, then it's going to be difficult, okay? Unless you're getting them all right, which is not going to happen, it's going to be hard. So we're going to dive into these segment by segment and have a chat about them, and just go for a different video today. Just have a chat, yeah, there's going to be plenty more like this, and we're going to be continuing with our other video series. But I want to be a few times talking to the camera and giving you some insights into the world of trading after being in it for 7 years. So yeah, let's get into segment one. Okay, so the importance of trading psychology. When it comes to trading, it's not just about having the right strategy, okay? It's also about having the right mindset. The mindset is just as important, or if not more important, than your strategy. Traders often struggle with emotions such as fear and greed, okay? This can lead to impulse decisions, bad decisions, over trading, under trading, and just not performing to the right degree that you should do to become a successful trader. To avoid this, the important thing to develop is discipline and organized approach to trading. Okay, trying to be as robotic as possible. After 7 years, I found that if you do have a bad day and then you try and make that bad day up while you're still feeling the emotions of that bad day, it very rarely happens, right? If you chase those losses, you're just going to get burnt by the market, because the market is more powerful and wiser than you, and you should learn that. This includes setting goals, right? You got to set goals. You got to set well-defined risk management plan and stick to it no matter what the situation. So if you start to veer off your rules, if you lose because you haven't followed your rules, then you have been in a weak mindset, because you're not being patient. You're not waiting for your setups to appear, and you're trading for the sake of trading, and that can may as well just be gambling, right? You want to find your edge, find your strategy, stick to it robotically for at least 4 or 5 years to master it, right? Don't veer off. I've gone through hundreds of different types of strategies, looked at this, looked at that, and then finally found a couple that seemed to work for me well. I managed to find a way to join them together and then add other information that I've learned over my years of studying this. So now I've found something that I've personally created for me, which I don't think anyone else does. That makes it more important to me, and I like to stick to it, and I want to make it work, right? There are some other setups that I use in trading, like breakout trades, etc. But supply and demand is my main bread and butter. It's something that I've studied for 4 years now, been trading for 7, and yeah, I found what makes me feel confident, so that's what I stick to every day. Okay, common trading psychology traps. The most common one, falling into overconfidence. Okay, you have a bad day, that's a bad day. But actually, sometimes what's worse is when you're having a great day, or great 2 days, or 3 days, or a week, and you get overconfident and you think, right, that's it, I've smashed it, I can't lose anymore, I can't have many losses anymore, I've done so well, and then the next week, the market changes, your psychology changes, your mindset changes, your energy changes, and boom, the market comes and humbles you in great fashion. So overconfidence is one trap to try and stay away from. Once you get a win, take it, move on to the next one. Don't celebrate for too long. Don't think that you're the best trader in the world. Although, actually no, do think you're the best trader in the world, but don't let it get to your head. Okay? Try and believe that you are one of the best traders in the world, absolutely. But when you keep winning, don't make that be the reason. Make your knowledge be the reason rather than your results. Another common mistake is sunk cost fallacy, okay, where traders hold on to losing positions because they've already invested a lot of money. So holding on to losing trades longer than you hold on to winning trades. Now this could be because once a trade goes in your opposite direction and you have that bias in the market, you want that bias to be correct because you don't want to be wrong. That can be really damaging to you and your portfolio. You need to flow with the market. If the market goes against you, then you need to look and potentially change your bias in the market, right? There's been loads of times in the past where I've stuck with trades and they've just gone down and down and down. I've moved my stop loss. This is at the beginning when I started trading. And all I did was lose more money, right? But now that I've got an understanding of how the market works and a better psychology in it, if my trade, say I'm going long, doesn't play out, and you can see a few examples of live trades I've got on videos on my channel, I'll then switch my bias and look for opposite direction, right? Because if the area that I'm looking at hasn't held due to my strategy, then it's likely that it's not going to hold or do any reaction. It's going to blast through and we're going to continue down to the next level or further, right? So it's all about not sticking with your losses. And if you are winning, try and hold your winners, right? You do see the money on the screen. You want to take the money if you're up. But that's why I like to say take partials, okay? So you take a little bit out, so you've got some locked in, and then you have a runner which you can leave all day, all week, all year if you wanted to, right? With a stop loss to break even. So finding that that ability to flow with the market is really important. Okay, so next one, managing your risk. Managing risk is very important because the more you risk, potentially the better you're going to win. But if you risk too much, the more you're going to lose, right? So you're going to need to try and manage it as well as possible. So risk management is key. It's essential to determine the amount of capital you're willing to risk on each trade and stick with that limit. Okay, don't be moving your stop losses. Don't be changing anything. If you have decided that is what you're going to lose and that's what you can lose, then if you do lose, that's it. Okay, always use a stop loss. Some traders don't. I recommend that you do. Purely because there's been multiple times in the past where actually I've been trying to set my stop loss and price has just, for whatever reason, completely dived and gone 30 pips beyond where I wanted my stop, and in a fraction of a second, and you're already down sort of 50 pips or whatever, or 40 pips or whatever it is. So unless you're quick on the button to cancel the trade, you know, sometimes these candles can form in a split second, you know, a liquidity grab, and you might just get blown out. So always put a stop loss, because that just gives you peace of mind that you know how much you're going to lose, and that's it, right? You're not going to potentially lose more because of random sudden market movements. Managing risk is really important, and also is managing your trades, right? So bringing stop losses to break even. Now some traders will say don't do that, they don't do it. Other traders will say do it. I like to personally, and if you watch my videos you'll understand that we'll go for a 1-to-1. Okay, we'll take some profit off the table, we'll then bring our stop loss to break even and let that 20% profit of the initial input run. Okay, that could run all day. We're then at a risk-free trade. We've won, we've moved on to the next bit, we can leave that running and we're on to the next trade, right? So having a risk management plan is just as important as having a plan to make money, if not more important. And finally, just to recap, the psychology is the most important thing. I recommend tenfold learning how to control your emotions when trading. Now, I've still been doing it for 7 years, and sometimes I have an emotional day which gets to me because I've lost a couple of trades, and if that is the case, you've got to find coping factors for that, right? I found that if I stay on the charts when this happens, then it's just game over, right? You're just going to be impulse trading. You're going to be trading without good decision. You're going to be trading without patience. You're going to be very jumpy. You're going to want to try and get that money back. The fact is that trade has lost. It's done. So go and do something that's going to take your mind off it, whether that's play video games. For me, for example, is go skateboarding. Okay, if I go for a skate, even if it's just for half an hour, just go and roll around for a bit, come back. I can either potentially come back onto the charts or I leave it for the day, depending on how I'm feeling. Just take yourself away and do things which can help bolster your psychology when trading. Okay, try and think in a robotic fashion. No emotion, just here's my rules. Each one is set up. Here's my entry. I enter. Win or lose, you move on to the next one. At least if you lose, you followed your rules and you know that in the long term that your rules do work because you've tested your strategy and whatever else. So work on your psychology, work on a risk management plan, and you'll become a better trader. So without further ado, you'll become a better trader. So that's it for this video. I just wanted to do something slightly different, talk about different parts of and aspects of trading. I want to do a few more videos on this and yeah, have some fun. Got some great content planned for for this year. We're going to keep on going with our challenges. We're going to keep on going. I've got a couple of interesting ones for compound interest challenge, which is basically a $20 trade account. And then using compound interest, we're going to try and get that up to as high as we can. And we'll run through that in one video. There's going to be plenty more. So if you haven't already, please like and subscribe. I really appreciate it. I'm trying to build a community with like-minded traders just like you. And yeah, I'll see you in the next video. Peace.